This is a video for anyone wondering how much borrowing capacity can I get as a first home buyer with 200 G's of income. That's 200K of income from a major bank versus a non-bank. And the credentials are the male 150K income per annum, the female 50K, combined 200K, no kids, and living expenses at the moment for both of them, excluding rental expenses, because they've got to buy a first home buyer property, which means the rent expenses will stop, will be 4K per month, excluding rent expenses. And their liability at the moment is one credit card, which they jointly shared at 5K. And right now I divided the table to major bank, which is the big four and the second tier banks, and a non-bank, which is some banks you have never heard before. Now I also split the quadrant up in terms of borrowing capacity with HEX and borrowing capacity with no HEX for both these scenarios. Now to set the premise right for this experiment, I'll be using one of the major banks calculator. I can't tell you which one just for privacy reasons, but I'll be using that right now. After plugging all these figures into the major bank's calculator, assuming HEX is $30,000 each, and living expenses was actually bumped up to $5,000. They don't care you spend $4,000. Their benchmark was $5,000 for a couple of 200K income. At 80% LVR, which means you have to contribute 20% deposit and plus stamp duty if you're buying over 800K, the lending is only 720K. If you're wondering, why 200K income and they can only get 720K? Well, they have HEX and they're using a 9.1 assessment rate. If someone has only 10% deposit, the lending will go up to 9.4 test stress assessment rate, which means the client only gets 700K. And if you're one of those couples where you earn less than 210K, which is like this one, and you want to apply for the first home guarantee scheme where you only put in 5% deposit and borrow 95% no mortgage insurance, well, the assessment rate, which is a stress test at 95%, is astronomically to 10%, which means your borrowing capacity drops down to 680K. And that's for someone that earns 200K combined collectively. Now let's move on to the next quadrant where they have no HEX, which means their rich parents would probably have paid off their HEX for them. And at 20% deposit, and I guess where that deposit came from, bank of mum and dad, they could borrow at 80% no HEX, 880K. And at 10% deposit, 860K. And at 5% deposit, 820K. And obviously at this point, you're gonna pay stamp duty because you're borrowing over 800K. Well, you're buying over 800K. As you can see here from HEX and no HEX, it's a vast difference of 60K to 100K lending. So right now, let's go to the non-banks, and you'll be surprised with the interest rate offered for unoccupied is not vastly different, maybe a little bit less competitive, but more lending as opposed to the majors. Choosing a non-bank calculator, which I can't disclose which bank it is because of privacy reasons, but at 20% deposit, at 80% with HEX turned on, it's 920K. For 10% deposit, it's 900K. For 5% deposit, it's 850K. Look at the vast difference in terms of 720 at 80% with HEX for a major versus 920. That's a bloody 200K difference. Look at the last quadrant, which is no HEX but non-banks. At 80% borrowing, which is 20% deposit, $1,050K. And for 10% deposit, you can get 1 mil. And at 5% deposit, due to a risk factor, they capped it at 900K, which is still a lot compared to, for example, the no HEX one. It's plain like daylight. You can see the vast difference over here. In terms of rates, which is the major banks, they're offering 604 at 80%. Look at the non-bank offering at unoccupied rates at 80%, 6.24. Let me ask you a simple question. Okay, so the major bank 6.04 versus a non-bank 6.24. What is the difference? 0.2% difference. For 0.2% difference per month in terms of interest repayments, but you get extra 200K lending. Which one are you to consider when you're pressed for meeting the budget you want to buy at? For a lot of my clients, I do this holistic solution where I provide them with these quadrants, these 4 quadrants, and then usually we go down the long-term planning of let's go with a non-bank, obviously non-financial advice, get your foot into the property market, buy at that price so you can secure the price in 2023, wait 2 years when the market has calmed down a bit, then bloody refinance to one of the bloody majors then. You're interested in more holistic solutions? I've got a 15-minute and a 60-minute consult time. You know where to look in terms of booking a call. And if you have any questions, jump in the comments and I'll read them and answer them.